Okay. Yeah, so before we talk big picture, guys, um, playing along here on Dragon. The 15 minutes not there, but the trend is up. Pretty strong move, so probably going to get a bounce here. So you could see I'm a little bit long Dragon. Going to come out of some of this right now, actually. If I can. Playing a little bit of a long on euro versus the pound for a bounce here the other way. Let me show you another chart. So cable is kind of testing this 141 area. Remember we talked about earlier in the week this wild looking consolidation. Usually the consolidation is more like this, right? The wedge will tend to narrow. This was actually widening, which is just kind of odd to see. But anyway, this is kind of the top of the intermediate term range. And then this is a pretty nasty move to break to a new low and then come all the way back to the high. So anyway, I sold a little bit up here. I might take a small core short over the weekend. That's kind of what I'm watching. Dragon failed up here when we got to the same area, 141. And now we're going to play a little bit of a long for a bounce this way. What else? Euro versus the pound. What do you guys got going on? Euro versus the pound is pretty oversold here near term, so I'm just playing for a little bit of a contrarian bounce the other way. Talk about Bitcoin in a second. Yeah, Stan, going long on Dragon day trade. This 5-minute cycle is really low. You see the uptrend. So what I'll do from here now is I start working the 1 minute. So I'm buying, I bought into this dip on a kind of on a scale, some bigger pieces down here, come out of those, let some of it run. And then this next 1 minute dip, I'm gonna be buying back in, coming out on the pop and just kind of work this 1 minute, see if we kind of head back towards 151. And then my risk is all down here. Like I wouldn't want the market back below here. So I just keep working it on the long side as long as we're above this area. Does that make sense? I missed buying the euro versus the pound. I was trying to get filled on another lot down here into this 87 the buck area. Would have been nice to be able to come out of a little bit right now. Stan, the stochastic on Coinigy, it's always the same. It's 5x3. Let's see if I can show that. 1 second. So on Coinigy, should look like this: 10 by 5 by 3. So your smooth, the percent K is 5, the percent D is 3. I don't know if you guys can see that. I don't know if the pop-up box shows. Probably does. Can you see that, Stan? Okay, cool. Felix, you're installing master nodes? Said BTC too choppy. Installing master nodes is better for Fridays. That sounds nice. I'm gonna buy a little bit of Dragon back here, guys. I don't normally like trading. I mean, this isn't the best time to trade at lunchtime on a Friday for sure. But the market's got some energy because of NFP, so the yen had a decent move. That's kind of why I'm playing Dragon. It might just die off, but let's see. Zuma? I haven't heard of that one. That's cool. I haven't heard of either of those. Guys, I still think Binance Coin is one of the best looking charts, as well as EOS. There's not a lot of tokens making higher highs and higher lows on the daily chart, but Binance is one of them. So this is actually one I was gonna put a buy signal out on this morning. I guess it got a little bit distracted. I still think it looks pretty good though. The 4 hour is not exactly low, but I like this location here at the bands. And right here. So you can see that the TMS really changed. You know, lower highs, lower highs, lower highs, lower highs. We had lower lows relative to here. This was a lower low, obviously. This was a lower low. This was a higher low relative to this low. But then you got another lower low here. But that all changed when we got through this right here. So now you're in a confirmed uptrend with higher highs and higher lows. So that's what you want to see when you want to start getting more aggressive. This was a good place to add. This is the first move up. You get the pullback. You can kind of see how you create this nice bullish wall right here. About halfway is a good spot to start buying back, right into the bands here. So this coin looks pretty good. You're back on the 8. It's a good spot to add more near term, your intermediate term. And then EOS, I don't know if I have a chart versus the dollar. I should somewhere. Let's see. So EOS versus Tether or versus USD. hasn't made a higher high. You haven't got above the bands. But relative to BTC, it's, you know, it's got above the bands here. This is why it really matters how you're pricing things. If you're pricing things in Bitcoin or versus the dollar, but definitely outperforming Bitcoin on a relative value basis. Stan, is that P3 phase 3? Yeah, on what I was just describing there on Binance, yeah, that would be a phase 3 when you make that higher high. I don't know, daily's not high on Binance. No. Geo, good question on FX. So Geo is asking this FX move around the jobs number today, jobs report first Friday of every month. And yeah, when you get big news events, payrolls is obviously one of them. I trade those a little bit differently. So there's a time to go contrarian. You just have to be a little bit patient. So I always teach my traders, you gotta kind of think smaller size over a wider range of the chart. So here on the euro, you can see that the 5-minute trend went bullish, right? When you get above the bands here, for example, on the euro. So you get back above pi, you get back above the 200, take out this high. But really, when you take out these highs, you start to form the structure that's this way. But you can see right after the number, there's a lot of back and forth. So the way to think about it is to play a wider range if you want to go contrarian. So you play, if you sell a little bit here, you play smaller size over a wider range of the chart. And if that initial reaction really, really makes a move up, then you can sell some bigger pieces. But you just have to be kind of patient. You can't be locked into like getting really short right here. You got to realize that these might have 50 pip swings or more right after the number. But if you fade it a little bit, then the market had a knee jerk back the other way. You can cover some. You could even played it a little bit the other way. But after that initial knee jerk, you got to kind of look for the trend. So, I mean, yeah, you could have faded this here, but you only had a little bit of a pullback. The better move is actually, once you establish this wall, to start buying the dips here. Like this last dip was pretty good on the euro. You want to, when you're day trading, you want to stay with the power for the most part. Like you can play the knee jerk reactions right after the number. Again, you just play it wider and smaller. If you play small, you can survive a wider move on the chart. And if you're playing smaller size and you get a 50 pip move back the other way, you can still make a little bit of money. But for really, you want to stay with the power for the most part. So this whole move right here is the power. So most of the time, if you try shorting the power, it doesn't end well. So, there were some 1-minute dips in here. All right. There's some dips to be had in here. So you can see that this is a knee-jerk reaction with a move back down. this is not a knee-jerk reaction. This is trending. Yeah, I mean, I don't want to be I don't want to have a big day trade on in front of a number like that. Definitely. I mean, most traders they get flat in front of those big numbers. All my days on the desk, I mean, you don't put big orders on the screens. You don't work orders for customers in front of the number like that. There's just way too much. It's just too random, and the risk is that you get filled and the market rips through your level. If you do that to a customer, I mean, they'll probably never trade with you again. That's called taking a guy through the number. So, but definitely when you're prop trading, I mean, day trade, I mean, if you have some core positions on, obviously you go through the number, but you would never want to be heavy right in front of a big number, the Fed or ECB. Getting a little bit of a pop back here on euro versus the pound. I'm going to come out of some of my long. Let's see if cable kind of firms up, or I mean, dragon. You started your day late. All right. I'm glad you didn't get run over then. You guys want to look at BTC futures? So this morning, just kind of woke up. We were down. I covered. Not much of a bounce today. So this 30-minute cycle's come back up. It just actually crossed here in the last 10 minutes. So I put a piece out back short, even though we didn't bounce very much. Sometimes I'll reshort even though price doesn't go anywhere, just based on time. If you're truly a true cyclical trader, or if you give the cycle importance, it makes a lot of sense for you to make market moves, even though price hasn't done anything, just based on the cycle. So you won't see a lot of traders do that. I guess it's foreign to people. Why are you reshorting the same level? Well, it just has to do with time. I mean, if something can't bounce when it should with the cycle, I mean, that's bearish. So these are turning points. I reshorted a little bit here that I covered this morning. And we'll see. Maybe we get a chance to cover a little bit later in the day or this weekend. This intermediate term move has kind of been in place since we failed in front of 12,000 back in the beginning of March. The daily cycle was pretty low coming into this week, but we just crossed back down, which is kind of interesting. So maybe we cycle a little bit further and retest these lows into the weekend. Don't forget, crypto likes to make big picture highs and lows over the weekend too. I don't know if it's just because other markets are closed. You know, markets tend to kind of do strange things like that. They go where the most pain is. You'll tend to make a higher low and nobody's really paying attention, or the liquidity is low. So we'll see. That daily cycle flip. Let's look at the 4 hour. 4 hour crossed last night. It's still in a down cycle. The hourly was high. I'll probably stay with this short for at least the hourly cycle, or at least all the way down the 30-minute back down. I mean, I'm not going to cover all of my short guys until we test 6,000 or we reverse back above some of these pivots. So the near-term pivot, if you're playing day trade shorts or, you know, shorts into the weekend, this is the level that matters. I just talked about it in the room, 6,900 area. It's actually a little bit higher than that. It's like, what is that high? 69.20. I think I sold 69.10 maybe. I don't know. So anyway, that changes the picture near term. That would get you back above the bands on the 30 minutes. So everything's still down near term. And then the intermediate term, the level is much higher. It's this pivot right here. It's this 91, 9,200 area. It's right where pi is now also. So that's not, unless you get back above there, it's not really going to change the intermediate term picture. And then that's kind of, that area, 9,200, that's a prime location for another lower high. In the context of, if you do bounce from here, you should look for a lower high right into that same area. And then, because really the TMS in our model, guys, for the big picture is still up here at 12,000. But if you were to come down, whether you make a low like right now, right here, right now, whether you make the low here, but I'm just saying, if you were to bounce, that's a good spot where you most likely make a lower high. And then if you came off of there, then that would be your new long-term pivot right there. But you still would have to make that process. If the market just rallies straight through to 12, then point is that we're not going to be making high. The structure isn't making higher highs yet. Whatever move we do from here is most likely a bounce to another lower high. You know, so for the big picture, getting a little bit of a pop back here. Dragon. Felix is asking, do you go through position charts on a cyclical basis or you set alarms? For example, how do you not miss the hourly is down? Yeah, you know, I don't get crazy and like set an alarm for the middle of the night or try to wake up if a level gets hit. I mean, if I have a lot of risk on, I'll just get up and trade London. I mean, if you have too much risk on that you can't sleep, then you're taking too much risk on the core side. But no, I mean, I'm just constantly constantly rolling through the charts, you know, just keeping an eye on the hourly, kind of like we're doing right now. It's just, you know, as soon as you wake up, you know, I guess if you're not checking the charts before you use the restroom in the morning, you're probably not a real passionate trader. So I'm going through the 15-minute and the 30-minute cycles on the euro versus the pound, euro versus the dollar, pound versus the yen. I'm going through all those cycles pretty much right off the bat. Where's my daily cycle? Okay. Where's my 4 hour? Where's my hourly? Where's my 30? Where's my 15-minute? And once you cycle through all those and I look at the trend, I pretty much can see where the edge is or where the opportunity is right off the bat. So guys, I guess I'll just show you something here on this dragon, because I know some of you are learning to work your size and stuff. Well, let me show you on the chart we're on right now. I guess so along those lines. Sure, Stan, we can talk about the edges. So an edge in markets, and let me just move my mic a little closer to me. So the psychology of trading, when we talk about edges are just places on the chart, or however you determine your edge in your trading strategy, your trading model, your trading plan, your investment strategy. And if I'm talking about I have an edge, well, it could be different things. You know, some quants have an edge. They have a computer model that they run that they've found an edge in markets. You know, high frequency guys, they rely on their edge. You know, the speed to which that they can get in and then get out, and direct access to exchanges. I guess you could have an edge where you have inside information. We call that jumpsuit risk. Right? Yeah, that's a good way to end up in an orange jumpsuit, trading off inside information. But you know, technically that's an edge. You should have a higher probability of something occurring if you know what's going on. But so our edge in markets, obviously, over the years, is exactly, I asked myself that questions a million different times, is like, and the same questions that some of you guys are firing off in the room is like, do you think it's going to go up? Do you think it's going to go down? Should I add? Should I not? Should I get out? Should I cover? And so unless you really develop a process, that mental battle never really ends. You have to just be able to say, all right, time out. We've got to put some framework around how you make the decision. So when I'm part of what I call this top-down approach, is we go through the monthly charts. You could go through the higher time frames. You could have a quarterly chart. You could have a yearly chart. But the thing is, you want to start big picture and then zoom down. And so when we break out our trading time frames on a multi-durational model, it's, hey, is this a long-term investment? Am I trading the monthly, the weekly, the daily? Okay, I'll look at those cycles. If I'm swing trading, or if I'm trading around a core position, I care about 3, 5, 8-day moves. That's really determined by the daily cycle and the 4-hour cycle. And then obviously day trade stuff, we just go 30-minute on in, right? So the 30-minute and the 15-minute cycle. So I don't have any really big core positions right now, just because the markets really aren't trending that much from a big picture perspective. I mean, the euro has been trapped inside this range of 121 to 125. So that's not exactly a trending long-term picture versus something like 2014 when this market was just a one-way train. This is a weekly chart. I mean, look at that. See how that's trending? And then here we are just jammed up inside this range. So whether the next move is to 130 or back to maybe 116, 115 is yet to be seen. That's kind of what I'm waiting for to get more aggressive from a core perspective. So a core position is something that I hold overnight, might hold for several weeks, several months. So I'm pretty light as far as that goes. So when I'm waking up in the morning, if I have a small core position on, maybe I cover some this morning. Maybe I put that back out a little bit higher, closer to like 123, 123 and a half. We are a little bit oversold relative to where we failed a couple weeks ago. So there is some room to bounce, but I also think that I'm going to talk about this in a second. Is I think we're close to a big picture shift in the market. I'll talk about that in a second. But Stan, to answer some more of this question on the edges. So I'll look at something like Dragon here and notice that, all right, this has been a pretty good range right in here, right? Like this is the intermediate term range. But we also had a pretty good downtrend going this way. And the market couldn't decide whether it was going to get above the bands. And then today was the first day we kind of popped through this resistance. So from a core perspective, this is not something I'd want to be short. The edge is actually now that we can push a little bit higher, right? So I'll look at stuff like that, big picture, from a core perspective. But then when I'm thinking about day trades, I just, there's no reason to even look at the 1 hour, the 4 hour. That shouldn't determine your process unless you have a core position. You just care about, hey, is my is my near-term trend up on the 30-minute? Where's my trend? The trend is going to show you where the edges are. So when you're in an uptrend, you don't want to be buying really extended from the 8. We want to be buying back towards the 8, right? It's part of why I was just when we came on, I was saying I like buying right here. You're right on the 8. The 8's rising, right? Sometimes you get higher lows near the bands or the 30. So those are your edges, right? Within the context of the trend. And then that's concerning price. When we want to talk about time, the edges are around the cycles, right? Or the turning points. So that might look like waking up and just seeing that the 30-minute cycle or again, if you're trading overnight on something like Bitcoin, I care about the hourly and 4-hour cycle being low, because I would be trading a more of a core position, holding something overnight. But, the edges when you're day trading are around the 15-minute, 30-minute cycle. That keeps you from going long up here heavy after this bounce, just because that cycle was pretty high on the 15-minute. Now you're starting to see the 15-minute want to go the other way. So from a timing perspective, you're better off being long. Yeah, no, edge is just something that defines a higher probability of something happening. So, that's the probability. When you're in trend, it's much easier to make money because you tend to make higher highs and higher lows. If you're always shorting higher highs, even when you're right, you don't have as much distance to be right, because you're more than likely you're going to get a higher low within the context of the trend. That's why we do all that work around phase 1, phase 2, phase 3, because if you realize you're going contrarian all the time, a lot of traders like to just buy lower lows, and it's just not a successful strategy. there's a way to go contrarian. You just have to do your size smaller. So let me just see if there's anything else to do. Yeah, so here, just along those same lines on this dragon, guys, when you get you can see how you can start your trade light up here. And there's little 1 minute opportunities, like little 1 minute scalps that I can do inside of that 15-minute bar. But really most of my size, like you can see, I still have a small lot up here, but all my bigger size was down here in this tail. So you can start higher within the cycle, but you can't get your size on until you get low within the cycle. Not up here. And then on the way down, let's say you're playing it this way, and on the way down on the 1 minute, there's opportunities in here. Maybe blue is a little easier to see. So this was the 5120 was the high up here. So on this pullback, like you can get long in here, and I can come out of some on the 1 minute, and then I'll still hold this like 30 piece. And then if we get another dip, I can kind of buy here, and then I can offer above the market and come out of some. And then as you get the drop, like I was buying into this drop here, and then I'm literally getting heavier into this dip. The market starts to pop. I'm realizing some of those gains. Pop some more. I'm coming out of more. I'm coming out of more. I probably could have taken this lot off while we were talking right here, but so now I can buy back into this dip, kind of on a scale like this. See how your cycle's low on the 1 minute? So then I can start feeding back into this dip here. I'll bid below the market. This is kind of late in the late Friday trading, but then I can start bidding back into the lows here. Right. Pretty good bounce so far. I could come out of some of that. So that was just, there's a quick example on the 1 minute right there. You could buy into those 1 minute dips, and then you want to start coming out as you bounce back up. You can see on the market watch over here, This is a difference between your bid and offer price. But when you see how it starts to get smashed right here? So when I get a down tick like this, you want to be buying into the dips like this. And then when it starts to go back the other way, you want to be offering out above the market. This is how you make markets. This is what market makers trade like. Yeah, it'll be nice when like Bitcoin develops like this and you get, big liquidity, and obviously Forex is the most liquid market. And then I'm constantly going back and forth, checking my 15-minute, which is still low. So I can get aggressive as long as I have the trend and I have the cycle. I mean, you can't be trying to work big positions chasing these 1-minute trends up here. You're just asking to get all out of whack. You got to wait for your better location. Now I can start taking bigger swings, This is the art of the size. Now you see how the tick chart's going back up the other way, then you want to be offering. And then I watch this 1-minute cycle too. So so the 5-minute cycle is still coming down. So I can be a little bit patient for that too. Like if I would have got, I'm kind of talking here, so I'm not really offering and bidding and offering that much, but there was a chance to be bidding right here. And then now you'd be offering above the market to come out of some. So anyway, that's just kind of what I've been doing today. A little insight to how you trade these smaller time frames, guys. This is what we do in the coaching and live sessions. This is what my traders and we work on. Every day, every week. I've got guys that have been with me for years. I mean, this is how you get good at. This is how you hone in your craft. If we look at the what I wanted to talk about today, though. The big picture, there's a lot going on in markets. So the last couple of years, the real dominant theme has been growth I wouldn't say the last 2 years. The last part of the Obama administration, we had growth really starting to decelerate. Maybe I can bring up a chart of GDP here. I can be fast enough without boring you guys. Let's see how fast I can do this. I posted some of this in the trading talk earlier in the week, and so I've been getting closer to making a really big picture call that we might have a big dollar breakout here soon. This might be too buried in the chat. Well, here we go. All right. Okay. Let's see. This. I'll just share the whole chat room for everybody. So this is in our trading room, right? Our trading talk room. So GDP, this is what defines the major global macro picture. It has a lot to do with growth and inflation. If you get both of those right, you're going to get a lot of things right in markets. So the growth picture, and this is specifically U.S., obviously U.S. growth kind of is only a part of the world economy, but obviously we're a big part of that. So where the U.S. goes tends, the rest of the world tends to go the same route. China is obviously a big part of that. Europe, But anyway, so this is the GDP picture. And this is from Hedgeye. These guys are great. They do some of the best professional analysis. Keith is a CEO over there. He's a captain over the Yale hockey team, so he's a hockey guy too. But he ran a couple hedge funds, and he didn't run the hedge funds. He was a trader at a couple big hedge funds like Carlyle. And, forget the other one he was at before that, but anyway, so he's traded real risk before. He knows his stuff. He's a buy side guy, but these guys do good analysis. So this was the trend in growth right before Trump gets elected. And so regardless of your politics, it's just, this is the score. So since he gets elected, the market, just absolutely took off. And part of that too is we went from 3.8% growth, and this is year over year. So everything happens on the margin, guys. It's not about like, hey, is it a good number? Or is it a bad number? It's about, is the number getting better or is the number getting worse? That's called happening on the margin. And so, hold on, let me come out of some more of this dragon. Is the number getting better or is it getting worse? And so the question is, from here, this is just the growth side, is do we decelerate or do we continue? And based on their tracking model, we're supposed to probably, growth is going to decelerate in the back half of the year. And their model is usually very good as far as their predictive tracking forecast model. The street tends to be pretty terrible. So Wall Street was thinking lower GDP estimates for this entire move up. That's why most of the people have been fighting this whole rally. But now we might be making a peak here in the first quarter, and I think the back half of this year we're going to see a big global macro move. That's certainly possible. And part of what causes the cycle, guys, too, is just on a comparative basis. The faster something goes up or the faster something goes down. For example, like oil really fell. Was it last year or 2015? 2015. And remember when we had that big move to like 25 or 23? Well, just if you're comparing growth, if something drops that fast, well, as time goes by, the further you get away from those cycle lows, the easier it is for the numbers to improve, right? It doesn't take a lot of a bounce to have your inflation come back when you're measuring from such a low level. So the catalyst a lot of times for the cycle to turn is just the fact that it's so freaking low to start with. So just because we accelerated so fast here, there is a good chance that we could have a little bit of a cyclical slowdown. Doesn't mean we go into a full-on growth slowing like it was 2015 here. This was really a growth slowing environment. You wanted to be long bonds, you wanted to be long the dollar, but specifically long bonds, like long things that look like bonds, like utilities, all that stuff did really well when you have growth slowing. And then the opposite, like you want to be long high beta, you want to be long the stuff that's geared toward growth. That's why your tech stocks, NASDAQ really outperformed in most of this run up. So if we do start to slow as far as growth is concerned, the market might be front running that a little bit here. Mr. Market might be discounting that a little bit. And so what we need to watch, big picture, and go back to the charts. Is we can watch a couple of these levels that come in to play here with our model and stocks. Some of you guys on my team here, guys, if you played this bounce, we just had 3 good little 1-minute bounces. You want to be coming out of some of that dragon again, though. I mean, it's only 10 pips, but the cycle is high there. The energy might be coming out of this market too. I don't know how much I'm going to trade this afternoon. 1 second. Okay. So anyway, so if growth does start to slow, there's a good chance stocks maybe start to break down, and we can watch some of the. I guess what I was trying to say the other day was that you got to watch the big tech names because that's where a lot of the capital is, and if you start to break that down, you're going to have a big shift in capital flows. So that definitely matters. I mean, here we are, Facebook obviously under all its pressure with its recent scandal. Does it hold the higher lows here to keep this long-term trend intact? The last time it did that was 2015 when we had growth. You had growth slowing in 2015 also at a point here. But you held there. And so this is the trend that's been in play, and it's being tested right here. But you haven't broke that longer term trend. You know, a lot of the street likes to use the 200-day that already broke, but we're right back at pi. So that one's very on the brink of really breaking, and I would be a seller of rallies on Facebook for sure. I actually look to probably go short if you anything 170 handle. Makes sense. But Amazon, again, here's the daily. All this tech hasn't broken yet. We just have to. I mean, Amazon's bands are all the way down here at 1076. But I think an easier one to watch would be like Google. So you watch Google, you watch Facebook, you watch the bands here. These guys are gonna be all bearish because you're below the 200, but we still haven't broken our pi line. So these are big areas. If you break that down in stocks, we can even look at S&Ps. If you get below pi, this to me is a trend change, big picture, and that's something that hasn't happened in a long time in stocks. I was starting to think that maybe the economy was going to roll over into recession in 2015, and we did have parts of the economy was in recession. Industrial sector, a lot of the states that voted for Trump were impacted, and as the market was starting to roll over here, and then it reaccelerated. So this same type of slowdown may or may not be happening. It's a little bit too early to tell, but this is what you want to watch for. If we break here, this is the first time we really had a break since here, and then back in 2011, we had another kind of slow patch. So that just covers stocks, and then when we look at so obviously that's the riskier side of the market is equities. When we look at something like the dollar, I've talked a lot about this is still in a long-term uptrend, and all the positioning. There's two big markets right now that everybody is on the one side of the trade. It's on one side of the ship. There's two really crowded trades. There's actually three, but that's short the dollar. The net futures and options position is still very, very short the dollar. And in our model, it's not dollar long-term bearish at all. We're still in a long-term uptrend. All right, so the way we view that, my guys know that we're still going this way. And this is a big area, so it is kind of make or break whether this trend's going to remain intact. And I think it will, as I think because the market's fallen from here, and people just like they like to chase price. So it doesn't surprise me that everybody's short, and everybody that just stares at the 200-day or the 200-week is going to be short too, because they don't care that the fact that this 200 is still rising. They only care whether you're both above it or below it. And so we had another big sell off to start the year, but we're still holding this rising pie line, which shows you this is where the bull market began. And yeah, we had a huge move up, we had a pullback, and I think the next big cycle is this way. And so if I'm right, what are we going to look for to show us the signs that this is breaking back out? We want to look at the dollar versus the yen. We want to look at the euro. So the euro, same kind of thing. Here's the big picture downtrend. There's still a chance that maybe we push to 130, but I've been making the call that it's going to be tough to get above 125, and that's been the right call so far. So to pick the momentum up on the downside, is we got to crack this 121 area. I think if you start to see that go, then that's going to be confirmation that, you know, this big dollar rally might be unfolding. So that's what I'm watching on the euro. And then on the dollar yen, there's seen a lot of yen weakness this week. And hey, what's up, Adam? I'm not sure what indicator you're looking at there, partner. Is the fact that we're holding pie here. So the dollar index was holding our pie line. And then this is the perspective you have to put the global economy in. This was a serious rally here in the dollar. There's something going on here when you have a dollar rally like this, guys. This is the type of move I think you could see again. That's what's going to really break the back of the world economy is you get a dollar rally. It's not a collapsing dollar that everyone likes to forecast. It's the opposite. Anyway, I'm kind of jumping around. Weekly, you're holding pie here. So this is showing you 2013 was the start of this dollar rally, especially versus the yen. And in our model, this is the exact place that the market would want to hold. So that's why I've been saying you want to be a buyer at 105. I've been saying that for weeks. And now we're starting to turn the corner here. So when you look at the daily, I talked a little bit about this yesterday. Here's your lower lows. But then right here, you made what's called a phase 2 higher low. And then yesterday, we actually got a phase 3 higher high getting above this high. So the market is starting to try to go this way on dollar yen. It's part of why pound versus the yen was pretty strong also. It's just a lot of yen weakness. So anyway, I want to see this start to head back this way, and then the euro break 121, and I'm going to feel pretty confident that this dollar move is here to stay. And then the other thing that's kind of coincides with this big global macro call is that if you start to see oil falter, oil and the dollar have this very kind of unique relationship, but it's typically dollar up, oil down. And if the dollar starts to break out, not only do you have the same long-term setup here in oil, you have a pie line that's falling, which is the opposite direction of what the dollar was doing. You have a long-term bear market here in oil, and now you have a record long, it's ridiculously stupid, long, crowded, long-only oil position. And typically when it's that crowded, it unwinds very violently. And so, I mean, this is your crude oil spec features. It's crazy. So if you start to see oil as another confirmation of all these markets are linked. So if you start to see oil start to break down big picture and the dollar starts to break out, I think the risk is that nobody's really thinking about is that if oil starts to break this 57 level, you might be back in the same kind of free fall that we had back here in 2015, 2016. economy starts to slow, and this thing really just unwound quickly. So I think that's something we want to watch for. It's going to be tough for it to get above 70. The dollar does break out. There's no reason why oil can be back here in the mid 40s. That's going to wreak a havoc, and then that feeds into the economy. So a lot of reason why, like the manufacturing, you look at the ISM, which is a great barometer for the business cycle. You look at the ISM numbers; it's really high, which is late cycle. You'd expect to see that, but a lot of that has to do with the oil sector. So you get energy prices back down below 50, and you're going to start to see ISM roll over. And all that goes hand in hand. That's a big part of the economy. So that's where I think the risk is in the markets. I don't think markets are pricing in oil weakness. Everybody's short the dollar, everybody's long oil, and everybody's short treasuries. So if you get oil that rolls over, this is how you got to start thinking, guys, when you want to trade global macro. You think big picture, everything's connected. If you get oil to roll over, guess what those inflation numbers are going to look like in the back half of the year? They're going to be awful. So the bond market will start to price that in, and inflation coming down, bond yields should fall also. So then you'll have bond yields falling again when everybody's short, and you could have a big squeeze in the bond market and see treasuries take off. You could see treasuries really take off too if stocks crack. So that's what I think is a high risk of happening if we start to break these levels. Is you're going to see that those big three trades unwind, which is, again, short dollar, long oil, short treasuries. I think that's going to unwind. That's where I think the big picture risks are. So there's lots of different ways to play that if that unfolds. We can play 30-year bonds on the long side. We obviously can start selling rallies. And we were pretty aggressive. We made some really good calls. I have one of my traders who's probably up like 30 grand the last 3 months trading a lot of oil. And I haven't even really been signaling. He's just been trading the model around. But, man, we made some really nice calls on oil back here. For most of this move down in 2016, 2017. And then we stopped shorting and pivoted and just said, you know what, market can rally once we kind of got through this 50, 55 area. But there was some nice spots to sell in here. I think there's a chance that we roll back over. We want to watch 57, 58 on the downside there. Looks like Dragon's just kind of tailing off into the end of the week, guys. So, on that note, let me share with you guys some of the wins that we've been having. So, are some of you thinking about joining the live room, signing up for the coaching? I know some of you kind of messaged me. I just encourage you to do so. Our training model is great. If you want to learn the model, that's going to get you really kind of tuned up to where you should be, how you should start viewing markets, how you should start the psychology of trading, how to time the cycles. But when you really start to see things live and you start trading together, there's so much more growth there that happens as a trader. So this is what one of my guys sent me yesterday. Like, Jason, I want to really thank you for all your knowledge you've given me with your course in live trading, like the consistency I've achieved. And I don't know if you can kind of see it here, but he did like 8 grand in January, 8 or 9 grand. Net futures profit or loss. His second page. This is what, February, did 10 grand. So really, really proud of these guys. Some of these guys have been working hard for a while, and it's just working on staying consistent with the process, guys. I don't know if you can see it. I think that's his third month, 9 grand in March. Which is awesome. And yeah, so I'd like to get some of you guys trading more futures on Bitcoin also, because all the real opportunity from an income. I kind of think of my trading as two types. You have wealth building and then you have income. So when you're trading the near term, that's more about generating income, and then taking, your income from day trading and swing trading and rolling that into some longer term stuff. But all the opportunity in the crypto market's been on the short side as far as, income type of producing profits. It's not, although these are great long-term levels to be adding, you're just going to have to be sitting on stuff for a while. So there's a lot more to be had here when we're trading around the near term. What other questions do you guys have? Thoughts on big picture gold? Well, so again, you got to get the dollar right, and you'll get a lot of other markets right. If I'm right about this dollar rally, it's going to affect the commodity sector too. Now, I've been saying that commodities are going to be probably likely to do for a big picture rally, also like a multi-year rally. That's still a fact also. But I think you might have the dollar rally first, and then you'll have a long-term commodity rally. So that's why it's so key to get this dollar call right. Because if the dollar starts to take off, it's going to be really hard for gold to rally. It's going to be really hard for commodities in general to rally. So since they peaked in 2011, the commodity sector, right? It went into a bear market, a typical 2 to 3 year reactionary move. The long-term picture changed in 2013. You had a 3-year sell-off. We bottomed in 2015, 2016. And the market's been sideways. I mean, looking at gold, yeah, you can trade it. And especially, this is a great way to do it. If you want to play the euro short, like we do a lot, day trade and intermediate term, if you're short euros, long dollars, well, on days when the dollar is down, gold typically likes that, right? Gold really likes when you have rates down and dollar down. If you have rates down and dollar down, gold really likes that. Because when rates rise, gold has to kind of compete with a higher interest that capital can earn when it goes into bonds or other interest rate products. So there's some opportunity to play these two off each other. They call that a pairs trade. If I start to get really long and short euros for this dollar bull run, if it starts to break out, I'm going to back off buying dips on gold, because I think if gold really takes off, if the dollar takes off, you're going to probably see gold, maybe back 1,200, maybe even lower. But that said, if we don't get the big dollar move next, and dollar maybe continues to be weaker into this year, then I think you do have a chance for gold to finally break out. And that would be a good sign that maybe the commodities want to rally first before you get another big picture dollar rally. So you watch this 1375 level is really major on gold. And then that's got to coincide with the dollar breaking back down. We don't have that yet. So I'm not surprised at all. That's why gold hasn't taken off. You're just not going to You're not going to break out gold with having the dollar still in a bull market. It's just not. It's very small chance of happening. That's why, you know, these guys that constantly talk the dollar down and they're these gold bugs. I mean, forget it. The gold hasn't gone anywhere. It was down for most of the last 10 years, and then it's been sideways for 2 years. Just is what it is. And I don't get these guys like Peter Schiff, man. He wants to talk. He talks negative on the economy constantly. He never admits when growth is actually accelerating. But it doesn't make any sense to have a big sell-off in stocks, talk about a 50% correction, and the dollar is going to collapse. There's no way that both of those scenarios happen. You can't have a big risk move where everybody in the world is selling assets for dollars and not have a dollar absolutely rip. They're on opposite sides of the equation. So his call that the dollar is going to collapse, that's another reason why everybody's short dollars. They don't understand that. They're looking at some of the trade deficit stuff. They think that's bearish. But at the end of the day, it's the capital flow. If everybody is selling risky assets, which means they're converting to dollars, that those dollars go somewhere. And then if we bring home all this repatriation that's going along with Trump as well, I mean, that's the capital flow back into the U.S. that nobody seems to be, thinking about. I think that's all dollar bullish. Hey, what's up, Santiago? Silver, it's going to follow the same thing as gold. If and when gold breaks out, then yeah, I mean, I'll be a bull on silver for sure. You can get a lot more alpha there. Silver just tends to move a little bit more aggressively. But I mean, look at it. It hasn't gone anywhere. Cycle high was 2011. I mean, it's going to have its time again where it's going to absolutely go on a massive run, but it's just not ready yet. So we'll see. Do commodities break out first and the dollar stays flat to down, or do we get a dollar rally that puts this commodity cycle on hold for longer? What other questions? Oh, good question. How does it affect crypto? That's a tough one. Right now, just crypto. I have two opinions on how I see the long-term crypto global macro situation playing out. It looks like for now, the correlation is Bitcoin seen as a really risky asset. So if you really want to speculate and get high returns, you trade Bitcoin. That's the perspective of, I think, a lot of the market. And then when you look at the fact that Bitcoin, where it topped and the low that it made here in February, I find it really interesting that stocks bottomed at the same day that Bitcoin did. So to me, that shows you a little bit of a linkage there. And so if you're going to view stocks as quote unquote a riskier asset class, 2000 February 6th was the low. Bitcoin the low, February 6th. That seems to me kind of be the correlation. So if you get dollar to really break out, part of the dollar maybe breaking out would be you do have to crack stocks. So we're going to have to kind of watch. If stocks break down from these same levels and Bitcoin might break down from those same levels, then we got to really play defense. The way we're going to play it is I'm going to cover a lot of my shorts here, probably all of them into 6,000 or 50, just a little bit below into this intraday low, right? And then actually add to some longer term longs in the crypto market at that spot. And then you play for a bounce. If the market can't hold these lows, then I'll probably take off 80% of all that longer term risk and just go back to cash and wait. Because if we can't hold these lows, if stocks break, then maybe we do see 2,000 or 3,000. I mean, it's going to be, the big picture is going to look pretty broken if we don't hold. But that doesn't mean we do break. I'm just saying that's the risk on the downside. We just could easily double bottom and be back at 12,000 or 20,000 by the end of the year. That's certainly possible too. So if we see stocks break though, and then that's part of the dollar maybe starting to break out, you don't necessarily have to have stocks break for the dollar to rally. But that's kind of the correlation I see. Now, longer term, I mean, we're due to have a monetary crisis. We have a new monetary system, tends to happen every 30, 40 years. A lot of it has to do with the debt cycles, but currencies really come under pressure when your governments start to go belly up. And so Greece was the tip of the iceberg. There's a huge problem with the Eurozone experiment. They should have never, they created a single currency to try to compete with the dollar, but they didn't understand that you got to have a single debt market to back that currency. And so tying the entire Eurozone together and then having individual member states with their own debt has created a whole nightmare inside of finance and inside of the banking system of Europe. And so as rates start to rise, which we're at stupid levels long term and as far as rates go, once rates really start to rise, and that, when I'm talking about, you got to get the 10-year through 3%. You're going to have to get some of these sovereign peripheral markets, Spain's, Portugal's, Italy's, Germany, France. You're going to get those rates to start breaking some long-term levels. But once that goes, you're going to see rates probably double really quickly. And once that happens, that's going to totally set off all kinds of this whole monetary crisis cycle. And it's that sovereign debt crisis, that's going to be a major issue for world governments, for the whole monetary system. And it could be a dollar rally that also puts stress on that, especially the emerging markets. I mean, there's probably 10 trillion that these countries have issued in dollar denominated debt. So you get a dollar rally, that's really bad for a lot of things as far as on the debt side. So my longer term view, there's a long-winded answer to that when crypto is that I think at some point when you see rates rise, you see the dollar rise like that, and there's all this stress in the system, in the banking sector, then Bitcoin, I think, is really going to shine. I mean, if the euro even survives past 2020, into 2032, this next big long-term private wave, that's a real question. Maybe that's part of the EU starts to break up more, but you also have the central bank spot pretty much half of the bond market, so they're going to be the first ones to blow up too when rates rise. And the whole confidence in that type of the old system, when you have central banks potentially blowing up this time instead of just the private sector banks, it's gonna create a whole different attitude and confidence shift, I think, away from the old system. And I think crypto is going to be a big part of the new monetary system that's going to come out of that, because it's got to change. I mean, these governments rolling this debt and never paying it off, these debt cycles are long-term cycles, but it's going to come to a point where it ends, and it's going to end really badly. And so then I think you see, in that scenario, I think you see Bitcoin, I think you see the entire cryptocurrency market just absolutely explode. I mean, there's no reason that crypto shouldn't have 1 trillion to 10 trillion of the overall kind of monetary system market share. we're still so small when you compare. You can compare the stock market. You just compare the amount of debt. I mean, everybody gets so bent out of shape about the Fed. Oh, the Fed's balance sheet. It's only 4 trillion, which is still a lot for a central bank. And you can argue whether that was reckless and whether that was right, but we don't put Congress under that same scrutiny. I love how you get on and Congress grills the Fed, but yet Congress is sitting here adding $1 trillion a year. I mean, we're at 20 trillion in debt, and we've added 10 trillion just in what, 5 years? Nobody talks about that. I mean, the printing that everybody says we're printing. First of all, we don't really print. We're borrowing, which is even worse. But the amount of the real money supply is not created from the Fed. It's created from the banking system. It's created from all the, the fractional reserve banking setup. So the debt alone and the money that's been created, because money is basically debt in this day and age. So the amount of supply of money Congress is responsible for is way worse than what the Fed's done. And I mean, when you talk about adding $1 trillion in debt or more a year, and the crypto markets, what is the total crypto market cap now? You guys know that number? There's pound yen kind of taking off now. Somebody's got to know that number. Can you guys look it up? 250 billion? That seems small. Is that right? 250 for the entire space? If you look at the top of the coin market cap? Wow. So think about that, guys. When everybody wants to talk about, we're not even at $1 trillion, and yet just our country alone is piling on $1 trillion of debt / adding capital to the system a year. I mean, you're gonna see some massive, amazing generational wealth transfer out of that old system into the digital assets or private money, whatever you want to call it. That's the long-term view. So at that point, I don't know, it could be. See, the thing with the currency markets is you would have the peripheral bond markets go. So, the euro would come under pressure before the dollar ever comes under pressure. So if we have a big debt crisis, a sovereign debt crisis, you're going to see the smaller countries crumble first, and then it eats away into the core economies. So you should see the yen, before you can really call a dollar crash, you got to take the yen down and the euro down first. I mean, there's not very many scenarios where you're going to have a complete collapse in the dollar, but the euro survives. It will be the others will go first, and then at some point, maybe the dollar goes. But typically, you have a deflation like that. So I think we want to watch the other currencies more so than just worrying about, hey, does the dollar rally? Does that take crypto down? I think if we start to see a big sovereign debt crisis, you might have a dollar really rallying and the euro absolutely getting destroyed. But crypto is still going up a lot because confidence is collapsing in government, and Bitcoin could capture a lot of that. Anyway, that was a long-winded answer, huh? For what does a dollar have to affect? Oh. Good questions, though. What else you guys want to talk about? Just putting some bids in below the market. Hey, Santiago. I haven't been trading stocks a whole lot. Shorted some S&Ps up here. We're at the top of the range. I've been playing mostly not long, a lot of individual names. Just been trading like Apple for the most part. Pretty defensively. I mean, I like when the market gets oversold. I like to when the market gets oversold, I like to sell puts or buy a little bit of stock, and then as it bounces, I like to sell calls against it. And so as the market kind of ebbs and flows around the intermediate term, there's opportunities to kind of trade around your position. You can express that via options a lot of times. So you can sell calls when the market rallies, market pulls back. Say he's sold 175 strike calls, and then market falls off. Those calls become worth less. So then you buy them back and you make money. You can sell the calls for more a higher price, more expensive up here, say for $5, and the market sells off. Maybe they're only worth $250. So you make 50% on your calls. You buy your calls back. Market rallies. I was selling calls again on this rally. So if we come back off, I'll be covering those calls. But you'll see me get pretty loud and defensive if we break. Like if Apple can't hold Pi 155, it can't hold these lows that it made 150 level, then guess what? We might be seeing the start of this much bigger pullback. I don't know if I call a bear market in Apple unless we cut back below like 2015 lows. But I will definitely be probably getting flat to short if we break 150 on Apple. And so Apple is pretty much the NASDAQ. That's another reason why I kind of trade Apple. All right, Felix. See you later, man. When you're trading the options, you want to keep an eye on volatility for sure. And that's another thing, big picture, that's changed is for a couple of years now, we've been in a bear market for volatility. That changed this year. So now that's another thing that the market's telling me we got to kind of raise some red flags that maybe global macro is a bigger move coming. We've got bull market now and volatility. So when the volatility is high, typically that's because stocks are selling off. That's when you want to sell puts at the low end of the range. You can also buy protection, buy puts at the low end of the range when the market bounces. So you made a good call to get long the VIX last time when we were down here, lower than the cycle. I'll do the same thing, be buying the VIX if we get back 15, 16, 17. So, yeah. So anyway, guys, just wanted to spend a little time with you Friday. It's nice to do these sessions live. If you guys, if you're not in our chat room, I mean, that's the best way to kind of stay up to, if our views are changing. You can tell I'm kind of starting to sense that there's a bigger picture global macro move here. Obviously we care a lot about these lows in Bitcoin that we're very close to. So got to watch that over the weekend and obviously next week. But yeah, I mean, if you guys aren't familiar with how to get to hook up with us, just go to jenkinsrm.com. There's the chat room here on the right-hand side. It's free to come on in there. And then if if you're around checking out the gains, there's lots of successes from the guys that have done the coaching guys. So if you're kind of on the fence, I would just encourage you to do it. I mean, it's a small investment into yourself, but it's something that when you learn this model and you learn the right way to trade and you get the right trader psychology, I mean, that's something you just have with you for the rest of your life. So, and you can start, I mean, this course and trading together, I mean, you're going to see all kinds of consistency that you never had before. You're going to see the market in a brand new way, how you work your size, and some really amazing stuff's been happening. I mean, I've got a lot of guys that reach out to me similar to my other trader there was just showing me what he's been doing in futures. I mean, it's great. Consistently cranking out 10 grand a month, part-time. And then, I mean, you got guys that on the crypto side started picking up the model and paid off 100 grand in student loans. I mean, this is a small investment to make there. Over your lifetime in markets, you're going to save them a lot of money. You're going to make a lot of money. So I'm happy to help anybody that wants to join that group. It's a good time. We have a lot of fun trading together. So anyway, I look forward to seeing some new names there. And I guess we'll see you guys in the chat. Anything else going on? What are you guys doing this weekend? I'm actually 35 today. Today is my birthday. I don't know if I feel. Sometimes I feel a lot older. I've got kids that are kind of old. I got started young on the family side. But anyway, I guess I'm gonna go probably play some golf this afternoon. Thanks, Joe. Thanks, Angel. Oh, Alexander, you're going to the Keys? You deserve it, man. You deserve it. That's good stuff, buddy. Which key are you going to? Santiago, yeah, join the live room. Yeah, for sure, partner. Thanks for the birthday wish. I really want to go down the Keys last week, and I just couldn't. I had too much going on. Stan, I missed that question a little earlier. On the Forex stuff, you're US based, right? Yeah, US based customer. So Oanda, OANDA is one of the big US firms, and the only other real one that's reputable is Forex.com, which is actually Gain Capital. So the retail Forex market, I mean, Interactive Brokers is good. Thinkorswim is good for Forex too. Yeah. Yeah, excited for Rhythm, Angela? Yeah, us too. The next couple of months we're going to be there'll be a lot of updates on that coming out. So we're getting anxious to get started. I did Noah, which is our senior head blockchain developer. He was just on the Bitcoin podcast. I don't know if you guys know, maybe some of you don't, but we have a trading show called Buy or Sell What the Hell. It's on Bitcoin podcast. Anyway, we do a couple shows a week there. We had Noah on. If you guys haven't seen the episode, it might not actually come out till tomorrow. I can't remember when Dimitri's putting that one out. But we were talking a little bit about Rhythm, but just our plans with what we want to do with the decentralized exchanges and some of the guys that we're talking to try to partner with. It's gonna be fun. I'm getting pretty anxious to get started also. But yeah, that's Buy or Sell What the Hell. And the other thing I wanted to just talk about too is the distributed post. We're really, guys, if you guys are passionate about writing anything crypto, we're we're trying to build a pretty good network here and just try to aggregate a lot of good information and just kind of build out our media channel, which we're going to have inside of Rhythm as that gets built out. But this distributed post is getting a lot of good feedback. So if anybody's interested in writing on here, you could reach out to Alec in the chat room. But also, I just wanted to remind people that to check this out, and we're going to do our best to keep putting on good information. We wanted to have a little bit of tech, a little bit of markets. Obviously, there's a lot of people with legal questions and legal opinions that Phil, our lawyer, has been contributing on that side. Anyway, that's what we're working on. But hey, great trading week for my traders. Guys, we'll be back at it next week. Enjoy your weekend, and I guess I'll talk to some of you in the chat room, and we'll see. So we'll see if we retest our 6,000 level on BTC. That's obviously the biggest thing to watch this weekend. All right, Adam. Appreciate that, man. All right, well, you guys be good. We'll talk to some of you in the chat room. All right, Santiago Dims. All right, you guys have a good one. Stan, Angel, Alexander. Have fun on the keys. Felix, Gio. We'll talk to you guys later.